Welcome, and thanks for joining me today on Mortgage Manager Playbook, a podcast for sales leaders who want to improve their team's sales performance and originate more loans. I'm Pat Sherlock, your host. Today's deeper dive is on the NARN settlement and its impact on mortgage bankers. The NARN settlement is the National Association of Realtors settlement, which resolves and ends litigation of claims brought by sellers related to broker commissions, or what's called the cooperative compensation rule. I have the perfect expert, Kevin Peranio. Kevin is well known in our industry. He's the Chief Lending Officer at PRMG. And Kevin, I'm thrilled to have you today.
Thank you so much, Pat. Anytime you ask for me to be on your show, you know I'm always in. I love your content. I love your knowledge and your wisdom, and thank you for having me on today.
Well, I want to tap into your wisdom because you certainly are well known within our industry and are active at all of the trade shows. And so let's talk about your perspective regarding the settlement and how do you think that will impact mortgage bankers? I know we just had a brief conversation talking about obviously loan officers do business with the buyer's agent traditionally, and this is obviously going to be a big impact for them. So what's your thoughts on that?
Yeah, I'd say most originators, especially in distributed retail, are getting their business from a local buy side agent. That is, what I see. And so it's interesting. I've been on the road all of March. I've been to about 5 trade shows, and then even last week we had on our national retail channel call Marty Kyer, who's on an advisory board for the state of Texas Real Estate Commission. He also works for Polonsky Vital. He went in a deep dive for about 30 minutes, and so. I've kind of had a chance to formulate my thoughts with all that, and just what I'll say is the main thing that changed is basically in the MLS, the multiple listing service, the sell side agents cannot tell the consumer what they're going to pay commission ultimately, right? They can't put it in the listing like, hey, this is a 6% or a 5% or a 2 and a 3 or 2.5, whatever it is. Who knows what it's going to be? It needs to be disclosed and negotiated. So ultimately, right now, I'm hearing a lot of opinions, and most of them have to do with the current market we've been in since the global financial crisis, which is basically the sellers call the shots. We've been undersupplied, I would say severely, since 2012. Mm-hmm. And so supply side, sell side agents, sellers still call the shots. And so that means right now the buy side agent commission is probably the most under attack at the moment. And that could change, by the way. We've always been in a buyer's market in our careers. You and I both have. And mm-hmm. so I'll get to that in a second. But the immediate impact as of July 1st, barring any, I guess, going back to court and trying to overturn that ruling, the buyer, when they meet with a realtor to represent them as a buyer, they will have to negotiate at that moment, at that point, what that relationship's going to look like. And some realtors have been doing that all along, but not all of them have. And so some will have to sit there and go, as a realtor, say, hey, I don't know who's going to pay, if the seller's going to pay, if I find you a house, or if you're going to pay, but I'm getting paid this for my services. So you, buyer, need to sign, it's either you or the seller, whichever one works out best for all of us. So they have to kind of agree to that. Well, in that case, there are a lot of buyers that, especially on the lower end, socio-demographic, they cannot afford to pay for buy-side agent commission. Currently, the Veterans Administration, the VA rules, veterans, it's a non-allowable cost for a veteran on a VA loan to pay for the buyer's agent commission. And so there's going to need to be some tweaks and changes in the system to help those two right off the bat. Now, the buyer's agent could say, you know what, no matter what, I'm going to get the seller to pay for my commission. And that's going to be our arrangement. Well, then that could limit their choice. So you might have a seller that not necessarily want to pay for that. Typically sellers and sell side agents are trying to get the highest and best offer for, the highest and best price. And in a lower supplied market, that typically will benefit the seller and the seller's agent, not necessarily the buyer and the buyer's agent for now. So that's a big change, and that's what everyone's afraid of how it's going to impact us right now. I still think the cream rises to the top. I still think there's a lot of very strong buy-side agents with a history and reputation and great relationships with lenders like ours or many others that you coach and mentor and work with, and of course have relationships with the sell-side agents in the communities. And so I think some of your buy side agents that don't do a lot of transactions and maybe just aren't good at selling their value proposition, I think they're going to be under attack and may be forced to kind of work with maybe a stronger local leadership to help coach them up, or maybe they get managed right out of the business.
So, Kevin, I think you raised really great points, and I'm curious about your thinking. And there's been some conversation, but not a lot. Is this an opportunity for lenders to actually what they're calling dual representation? In other words, what they're talking about is that maybe a lender will have a loan officer also not just be on the lending side, but also be a buyer's agent. What are your thoughts on that? And do you think that's realistic, or do you think that's just really pie in the sky?
Well, in my experience, I see people that start in real estate that maybe don't necessarily like the job and the gig, but they understand it and they are licensed as a real estate agent, and then flip over and become a full-time loan officer. I see and
Right.
be more successful as a loan officer. I actually see that happen more than the opposite, where someone starts in on the origination side and they don't really get it, and they go become an agent. And so, having said that, my personal opinion is whatever you do full time and whatever you 10x down on and master your craft, that's usually the best case
Mhm.
scenario for the consumers that are involved. And so, having said that, I do think there is a chance for a strengthened numbers approach between local realtor and originator to kind of coalesce together even stronger through programs like this. Our retail channel does have what's called an REP, a real estate program, but we do offer co-origination from a realtor if they want to take part in the real estate, excuse me, on the origination commission. But it's just, I believe, like less than a dozen that are doing it. Again, it takes a very, very rare breed. There's 1.4 million agents out there. We've got, like, again, less than a dozen, and they have to get licensed, right? They have to get licensed. They have to go to the test. And believe it or not, someone that's like realtor first, that's not an easy thing for them to go do and go pass. And so, and again, I think it makes pricing a little bit worse too, right? So now you have to, now you're structuring, a commission for a co-originator on the other side. And so, I mean, it could work in very small alliances and very local, maybe even already existing alliances. I don't, I mean, you could see, Rocket Mortgage tried it in mass.
Mhm.
Doesn't really work in mass. Like, let's just go out there and tell anyone in the world, just because you see an ad on Facebook or something, it's not like this program is some panacea, right? And so, but JVs and MSAs. I mean, there's some lenders out there that have been doing those for years, even
Sure.
on the broker side too. And so, I see some of that happening, but I still think a realtor is a realtor, an originator is a originator. The listing agent does the best on the listing side, and the buy side agent do that best side, and all three of them just kind of get together and just form a bond in light of the new disclosing methods that are now required for commission on the real estate side.
I certainly see what you're saying, but I'm curious about your thoughts on let's work it maybe in a different way where it would be in the lender's interest to hire basically people that are buyer's agents. In other words, it becomes part of your services instead of it just being a dual representation.
I mean, again, I could see a lender thinking that. It's just
Yeah.
that, like, at PRMG, we're old school. So we have this REP program where we are offering it today, and it's a great talking point. I think it could work like a small batch of limited release. But in mass, I mean, our company, like we could buy into a title company, we could buy into an insurance company, we could buy,
Sure.
we could buy, Cutco knives and sell that. Like, we could have a T-shirt factory and save money on T-shirts. I mean, all the dumb things you hear. We're an originator. We're built by originators for originators. We just want to focus on originating. I just think there's so much meat on the bone when you focus on what you're really good at. And by
Mhm.
the way, we have three channels at our lender. We have a correspondent, wholesale, and a retail channel. So to serve three different types of originators who all have their own value proposition, their own way at
Mhm.
different times in the markets, that alone is a challenge, right? So I
Sure.
just, you know, I could see some lenders doing it on a very small scale, but we've seen it play out, and I think people who 10x down on what their main model is. For us, it's being an originator. I think that it's what ultimately serves the company and all parties involved the best.
Yeah, that's a great point. No question about it. But I am curious about it does seem as if the buyer's function, the buyer's agent's function, is really primarily under the auspice of being the negotiator. So is it something where it seems to me like I could see law firms becoming more involved with it? In other words, the whole position now is being really changed in a fundamental way. And I also think it does say also, and I guess my second question has to do with loan officers. It seems to really reinforce that you have to be a lot earlier in the consumer's lending journey versus what we are now, where we're dependent upon the buyer's agents to deliver the referral. What are your thoughts on either one? Like, can you see a law firm now, or someone that would become as part of that maybe not the lender's offers, but becoming part of the attorney component where their negotiation, because that's primarily what the buyer's agent is doing. So, any thoughts on that?
Yeah, I've heard this line of thought, like, let's just break up
Sure.
every little thing. Let's do
Yeah.
the showing for $35 a la carte, Uber style.
Yes. Right.
Let's contract out the attorney. By the way, most large broker shops, even in the local markets, have an attorney that works in house with the team and does that. So it's already
Sure.
been kind of so I mean, could it work? Yeah, it could work. I mean, so now you have a first-time home buyer that has to negotiate with a lawyer. They have to negotiate with the Uber. They have to
Right.
negotiate with the realtor. I mean, it's like, the realtor does it all, and so they still do it all, and they have a history of doing it all, and they have a history. The good ones have a history of doing it all well, and all the reputation of how well they do it is all online. So could an attorney jump in the game, spend a
Mhm.
couple years building a reputation like I'm really good at being a negotiator? I mean, most attorneys I deal with are wage and hour scumbags that want to sue from the other side. And so my level of trust with attorneys is very
Mhm.
low. And I think a first
Mhm.
time home buyer is going to want to go with someone that they see has built up a reputation and trust. And again, I mean, I hear it. I think over time that could work. I mean, hasn't Redfin and Zillow tried to break up the whole process for over a
Sure.
decade? So anyway, I think at the end of the day, I think the value that gets provided to a consumer, especially a first-time home buyer, which by the way, millennials make up the largest home buying cohort.
Mhm.
Even they just overtook baby boomers, and that's not just for first-time home buying, for all buying. So the
Right.
millennials just took over the largest demographic. And there's a certain way they view attorneys. There's a certain way they view certain
Mhm.
things, and so online reputation means a lot. And even more to Gen Z, who's right behind it. And I would just say, and by the way, Alpha is after Gen Z. I'm raising three little Alpha girls, which is cool. So who knows what they'll all be thinking. But I hear that, and I think on the margin, I think again, a really good attorney that maybe has a history or has done it. Maybe he wants to spin out of his local brokerage he's been helping all these years and go, hey, I've got thousands of contracts under my belt, and here's my reputation, and now I'm doing it a la carte. I think it kind of muddies the waters. I think it requires an incredible ground force to do all the work that buy side agents currently do. I don't think the need for the army and boots on the ground all over, the world and all the bases that are set up. I don't think that changed overnight. I think the only thing that changed was the way they get paid. And so I still think our army is the best army, the real estate agent, right? And so to continue with that analogy, and yeah, sure, there could be some special forces that want to jump in and do this and that. But at the end of the day, it takes an incredible ground game to serve consumers that are buying, especially when sellers call the shots right now in a lower supplied ecosystem.
So when you look at the setup of the real estate agent world, obviously we have been patterned as the mortgage industry after that. And the buying agent has always been to move into a different line of thinking, has always been the entry position in the agent world, and you work yourself up to the listing side. And so by this but this group being actually segmented out in a different way, do you see that the real estate world is now the forces and the change looks pretty dramatic or potentially dramatic?
I think it does in this current market. And,
Mhm.
I know there's a lot of great training out there to be a better listing agent. I sat in on one in
Mhm.
Anaheim. Mike Ferry's been in the business a long time. And
Sure,
I mean, at one point he was doing like 30 listing agent training seminars a month. I mean, it's insane. Like this guy's a
sure.
machine, right? And so,
Hmm.
so I do think that skill set is still very, very powerful that's out there. Having said that, the number of people in the millennial bracket that turn the age 33, which is the first time homebuyer age, still goes up. each of the next couple of years, but we're actually about to get to the end of that demographic cycle. And so we are actually going to start to see the birth rates not keeping up with the death rates. And when
Sure.
Gen Z comes in behind millennials, we're actually going to see population decline at the first time home buyer age. And so I know it sounds absolutely insanely crazy for me to say, but we could have an oversupply of homes. And okay, let's say it takes 3 to 5 years, maybe 7 years. So now everyone's talking about what you're talking about, right? The sell side agent, they're calling the shots, they're rocking and rolling. What happens when it's like the buyers are calling the shots? So now now you have oversupply, right? And so those buy side agents negotiating down a better price or negotiating better and favorable terms where that commission is easier to obtain from the seller because there's too many houses. I mean, that could happen in America, right? And so, of course, one of the major offsets is immigration and bringing immigration in, whether legal or illegal doesn't matter. We have population growth as an offset with immigration, and that is to offset the population decline that we've been seeing in America. So those are some things to think about it's not in the near term, but this argument about how bad it is for buy-side agents, it could flip on its head. And that same disclosing piece, it'd be easier for them to negotiate the commission from the sell-side agent because the sellers would be happy just to get rid of the house, right? So it'll be interesting to see how those demographics play out over the years and see this conversation go the other way, where buyers and buyers agents are in control and not sellers and sellers agents like they have been, gosh, for quite some time. I've been in business since '01, and I remember when it was flipping one way or the other, right? And so, it does go in cycles. This cycle's been a pretty long one because no one bailed out the builders after '08. And so they all coalesced and they're taking their sweet ass time building houses. And I don't blame them because they got crushed. And so, again, we're in a seller's market now, but that dynamic can absolutely change.
Well, does that lend itself, Kevin, from your viewpoint, and this is the age-old question within mortgage lending, is that it does seem as if maybe the automation component of the lead generation, do you ever see the retail mortgage banker side really changing or staying fundamentally the same? And if you see it changing, how do you see that going to look?
Well, when you talk about automation, the biggest thing that happened in automation for our industry was when Fannie and Freddie opened up day one certainty and AIM, through DUNLP. The ability to have automation for assets and income and
Sure.
employment verification and have it all automated up front. That has opened up all the points of sale and all, the data-driven data connectivity to have less work done in a loan. Having said that, loans still take quite a bit of time because, contracts take 30 days, right? And so getting someone under contract takes some time. And then, if someone's selling their house, typically they want to be able to find the next one too. And so there's a little contingency there. So, I would just say that there's a lot of automation and there's a lot of really good companies that even the last 2 years when it was very difficult in our business, we continue to invest in technology. We rolled out a brand new pricing engine for all 3 channels. We have a new portal going out for our correspondent and wholesale channel coming up here. And then we've got some automation for document ingestion and automated income analysis that's coming out, in Q2, Q3 this year. So we're constantly trying to be more automated and have more time back to be more human and build the relationship part of the business, which I think ultimately is what all that ground game really gets exacerbated. If there's more automation, then it's your people versus my people. It's your agent relationships versus my agent relationships.
Right.
Both buy side, sell side, and then our originator, who's giving the best service and who's really connecting at that local level because they have more time to do it because they're not chasing down the last stupid blank page of the bank statements. You know what I mean?
Yeah, that's for sure. So, as an executive, and you've been an executive for a long time, what are the types of things regarding this? Are you really doing the strategy of kind of waiting to see now the Department of Justice just entered that they are now being able to actually look in this issue again with the settlement and the compensation issues? Do you see just wait and see is probably the best strategy, or is there some thinking about what we need to kind of think about that we maybe not have thought about before?
Well, I think this current administration has set out a lot of like the talking points and agenda and things they want to address. We we feel good about where we are. I mean, we're a Ginnie Mae issuer. We do a lot of manual underwriting. We do some really tough loans. We serve the underserved. I've got the Ginnie Mae DQ, HUD DQ numbers to prove it, So we do hard loans. We take risk. We risk our own money. There's four of us that own the company. Paul and Robert founded it, and then myself, and then Gary Malice. We've come in 8 years ago as partners. So we're doing the hard work. We're lending and serving the underserved. We feel good. Wait and see. The next big thing that's going to happen that's an actual change is there's an election in November. And so, we're going to see that potential change or continuation of the roadmap for the next 4 years. I personally, I don't really have a dog in that hunt, because I think when you have gridlock in DC in Congress, which you do, it's actually pretty good for business. There's not a lot of crazy, unexpected stuff that comes from one extreme or the other, and it makes it a little bit easier to navigate the business. I know AI is a big talking point. Appraisal bias is a big talking point. I feel like the industry has done a really good job addressing that. I mean, can you eradicate every little thing? I mean, we certainly try. And I read stories of lenders that get, clipped for false claims or redlining and other stuff like that, or CFPB, unfair lending, not passing their exams. And so we feel good about where we're at. We feel like we do things the right way as a company. But, we're constantly watching, right? I mean, there's always changes, and in an election year, there's a lot of talking points, but there's also not a lot that really gets passed at this point. So I'm curious to see what happens next year.
So anything as far as the NARN settlement that you see as something that needs to be what lenders should be thinking about, or should it be more along the lines of kind of waiting to see how it plays out?
Well, I think if a lender wants to get out in front of July 1st, and they can have conversations with their real estate partners. What are you guys thinking? What's your game plan? What are you doing? Here's what we're thinking. Here's what we're doing. Here's where we see things are going. And I think just having that open communication is very important. I mean, the analogy is like, as an originator, if you've ever lost a loan, you're like, why did this person go? I did a loan for them like 7 years ago, and then they went and used this bank. Why'd they go over there? Well, odds are you probably lost touch, and you weren't having phone voice conversations regularly with that person. I mean, at the end of the day, that to me is the ultimate in sales. And that's why a lot of call centers do really well. The whole thing is like, you've got thousands of people sitting in a call center, or at least hundreds, and someone hovering over them metaphorically with a stick saying, hey, make 50 phone calls and you're fired, right? Well, those phone calls matter to the person on the other side of the line. Most of us, you and I, we're on the front end, like the more, entrepreneurial relationship front end, local originator place. But some people like being that originator because, I can stop and go I have 4 kids. I can stop and go take them to practice or on a vacation. And well, then I'm not sitting there working 9 to 5 in a call center making 50 phone calls and someone's out calling me. And so I think just constantly pounding the phone, constantly voice to voice, actual conversations with past clients and future prospects and real estate agents is what matters the most. That's the pinnacle of sales professionalism. And I think that kind of sales mentality between originator and realtor having these conversations, I think will pay dividends beyond July 1st when the settlement and everything does actually change. I think ultimately that's the best way to operate your business.
Well, I agree with that 100%. There's not enough of it, that's for sure. So that's why you guys are successful versus others, which is good.
We're trying, but it's sure frustrating. You got 700 loan officers, and the top 20% are making the phone calls. They're just pounding the phones. They just love being on the phone. Being phone averse is tough in sales of any kind, that's for sure. So you're constantly trying to coach up, everyone else and get them to have conversations that are meaningful. And as well as anyone, you're one of the best coaches in our business. And so you absolutely understand how important that is to an originator or realtor's success. It's just always being on the phone, never stop talking all day, every day, no breaks, or else someone else is going to have that phone call behind your back. And that's tough, right? But that's our business.
That is our business. So, Kevin, you've covered so much ground, and I just wanted to ask you a couple of takeaways for listeners today that you think really is important as regarding not just the NARN settlement, but to actually operate successfully today.
Well, I still think there's 2 things that I would say 3 things that I've been saying for about 2 years. Because I get a question like, what's your top 3 for originators. But it also I would say would at least two of the three would apply to realtors as well. You have to constantly mine your existing database, which means you've got to call. I mean, imagine if you called every single client you've actually done a transaction for once a quarter. Most people don't do that.
No,
and
they
in that
don't.
conversation, say, hey, I cannot get out the phone until you give me the name of someone looking for a house. I need you. I need a referral. Like if I did a good job, right? Okay, I need you to give me a name of someone. I need one more person to call. You've got to know someone that's looking, right? So there you go. You've worked in your existing group of clients and database and past clients, and then grew your database. So that's number one. And just not enough people do that. They just don't.
Sure.
I mean, they just don't. They haven't called every person they've ever done business with, even once in a year, which is crazy. Not leave a voicemail, not send a stupid drip email campaign. Get on the phone and ask exploratory questions. Hey, what's going on? What are you thinking about? How are Kayla, Aria, Luca, and Serafina doing? How's school? How's soccer? Are you putting in a pool? Do you need to take out a loan? All these kinds of things. You cannot replicate a phone call. So that's number one. I would say from when it comes to technology, we found that originators that adopt 6 or 7 or even 8 different pieces of technology, and they kind of get them all working together, are very sticky and are very happy. And so what I would continue to say, and this I would say for realtors probably the same, just adopt one, to try and master one thing, right? So whether it's social selling, using something like Social Coach, this easy way to get on social media. People like social selling and social media because it's quote free. Well, I got news for you. You get what you pay for. So if you just pay like 40 or 50 bucks a month, you get something a little bit more advanced, something that you can schedule, something that you can help create content in videos in a better way. And so getting on social media, adopting one piece of technology, getting good at it, and then moving on to the next one, I think is another one. And then the third key to success, which I think really mostly applies to originators, but it certainly helps realtors, expand your product knowledge. We're really big in non-QM. We do a lot of non-QM. We do a lot of California Dream for All, which is free money from the state. It was like $300 million in funds last year. We had like 88 million of it, and in loan amount that we did. So learning a product, getting good at it, which separates you, helps you in a realtor win more business, which fortifies that relationship. So getting good at product knowledge, and I know it's going to be hard because later this year, the Fed's going to cut the rate, and everyone's going to be focused on refis, and they're like going to ignore the DSCR and the fix and flips and all the hard stuff they've been grinding it out with, the I-10 borrowers, tax ID numbers. They're going to start to ignore that stuff later this year because the other easy peasy stuff keeps coming in. But I would just say, the riches are in the niches, and so you have to continue to learn your product mix. So those are probably some pieces of advice that I would give as takeaways, and those hold truthful, universally, and evergreen, no matter what happens with this NAR settlement.
Well, I agree with that 100%. That's exactly what I teach all the time. So I'm with you, Kevin. You're exactly right for sure.
And I love your newsletter. I read it every single time you send it to me. I love it. I love your cards. I love your e-card. I love everything you do. If you aren't on Pat's list, get on her list, get connected with her. She is so full of knowledge, and it's just amazing. I really do. I really enjoy your newsletters.
Well, Kevin, I feel the same way about you, and I appreciate you saying that. So that's very nice of you. And I want to thank you for sharing your wisdom today for sure. And I want to thank our listeners, and of course, to subscribe and to receive notifications on our latest podcast, just go to patsherlock.com. Thanks again so much, Kevin.
Thank you, Pat. Appreciate it.
Thank you. Thanks for listening to Mortgage Manager Playbook. You can catch up on all our episodes by subscribing to receive each week a new show. Don't forget to share this podcast with your friends and team members. If you're looking to increase production, call me to discuss my prospecting sales training program, Ramping Up Realtor Referral Sources. Check out my website, www.patsherlock.com.